All right, good afternoon, traders. Today I want to revisit one of the bread and butter strategies that I use day in and day out. And it works across all markets. I primarily focus on the S&P and crude oil. But I've been asked with the recent volatility, does your strategy or does your indicator work with all of this volatility that we've had? And so I want to show you here the 3S code that I have on my trading view chart. This is a 5-minute chart of the E-mini S&P. Now obviously when we're trading the shorter term time frames, we kind of ignore the seasonality concepts. The point is, does the 1-2-3 pattern, the 1-2-3 strategy work in times of extreme or enhanced volatility such as we've seen over the last couple of days? And so you can see for yourself very clearly that it does. We had a very nice short this morning around 6 a.m. You see we broke below the number 2 here. We came back up and then hooked back down as we teach in our basic methodology. You can see that it's hit TP1 for about 5 points or so there in the morning and then hit TP2 for another 5 points in the E-mini S&P and then reversed off that level. If you can see what happened yesterday when we had a huge sell-off upwards of 1.5 to 2% to the downside in the indices, we had, as the market kind of came down all day long, we had a huge selling pressure. We had one last opportunity to buy the market here around 2 o'clock. We got a trade up above the number 2, a couple of retests, and then it hit TP1 for a profit of about 10 points, or it's $500 per contract. You can see we also had another small buy trade early in the morning before things started heating up from around 22 up to about 25.5. Now the other market I like to trade is crude oil, and you can see yesterday we had a trade from 53.90 all the way up to about 54.12 in the early market hours. We had another long trade from 53.40 up to about 53.60. A lunchtime trade from about 52 double nickel up to 52.85. And then this morning we had another trade from around 52.50 up to around 52.75. So I don't know what your dollar daily goal is, but these are nice $250 trades all before the cash market open. Now, so to answer all of your questions about does it work in volatility, the answer is very simple and short, just like my strategy, and it's yes. Now, from a seasonal kind of bigger picture perspective, we go over to the December E-mini on a daily chart. We all know about the October effect. That's basically where October is a perceived market anomaly where stocks tend to decline during the month of October. Probably mostly psychological than actual, as history shows that more often than not it tends to trade higher. That doesn't mean that we're not going to see volatility along the way. Now when you add other things such as the geopolitical tensions, things coming out of Washington, that can of course skew what quote-unquote should happen based on seasonality or technical patterns. But we are having a nice, well-deserved sell-off, and we have a larger 1-2-3 top in play, quite a bit of risk. So now, instead of playing the 1-2-3 top off of the daily chart, we'd be looking to buy in areas of price structure. If we take a fib retracement from the last swing high to this last swing low, we'd be targeting around this area of support, which is around 28.50. And then the next area would be the nice psychological number of around 2800. Seasonally, I did a scan to see what happens in this time period in the month of October, looking for trades that have won at least 80% of the time, lasting at least 10 days, no more than 45 days, and at least 7 years of trading history. You can see we had nothing but bullish results. I did the same scan to try and find bearish results, and we did not have any with this pre-selected criteria. So you can see we've got several different trade opportunities here in October. The closest one being calling for a long around October 3rd to about December 5th. So that's about a 60-day hold time. And then if you're looking for a shorter hold time, notice that we've got a couple of longs here lasting around the 2 to 3 week window. And you can see down here the average profit's been around overall around $2,500. We've had a couple of bigger ones here in this 2-month trade for about $4,600, but generally you can see that the profit is anywhere around $2,000 plus to about $3,000 per contract. Now, the good thing is we don't have to be concerned about holding or trading the full contract because it can carry a bit of risk. But thankfully, we've got multiple options, no pun intended, using the weekly E-mini S&P options, which are a very liquid instrument. Also have the new micros that have come out, and then of course SPY and other leveraged ETFs. So that's the way that I like to trade these markets, with reduced risk, because there's truly opportunity around every corner. Hope it helps. Let me know if you have questions, and we'll see you on the next update.